Welcome to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. We're talking about investment tax planning. So before we were talking about real estate and putting a liability protection fence around each one of these properties that you have, I come across individuals that have multiple pieces of rental real estate and they're still holding those in their individual name. Well, lo and behold, if one lawsuit comes in from a tenant, you can expose all of your rental real estate and your personal residence and your bank account and your automobile. So this should be the wake-up call, the impetus to give our office a call and structure your real estate transactions to where you have liability protection on each one of those assets. So again, to begin that conversation, give our office a call at 877-654-9798. That number again, 877-654-9798. So we gave you one huge tip on rental real estate. A lot of individuals will purchase a property that's called $100,000 and they will depreciate that entire property at 27 and a half years. That's what rental real estate is. The life of 27 and a half years according to the Internal Revenue Service. So what we do is actually bifurcate that asset, split it out, segregate it, and now we have multiple lines on your depreciation schedule. And therefore, we are able to capture greater depreciation in the earlier years, and that will actually reduce your taxable income. Now, depending on your adjusted gross income, we have the passive loss exception because the Internal Revenue Service says that all rental real estate is deemed passive. Bing. So what does that actually mean? Well, it means that passive losses can only be used against passive income. So your W-2 is active income, and yes, we're getting way into the weeds on this tax strategies, but you got to have some basic understanding of that. And being a listener here on the Professional Edge, just stay tuned. We're going to continue to walk you through this. So rental real estate is deemed passive income, and you only can have a passive loss. Let's say your rental real estate didn't do too well, and you have this passive loss, and it is $12,000 of loss. Well, depending on your adjusted gross income, you may not be able to take that $12,000 loss and offset your active income. So we have those two classifications. One is passive income, those things that you do not materially participate in. And then we have your active income, that is your consulting, your mowing lawns, your W-2 earnings. So underneath the Internal Revenue Code, though, they provide a special exception for passive activity loss rules for real estate. So you can take up to a $25,000 loss against your active income if your adjusted gross income does not exceed $150,000. But if you're over the threshold of $100,000, then it starts eliminating and is basically taken away from you 50 cents on the dollar up to $150,000 of adjusted gross income. So if you're halfway through that, you're going to be able to take a $12,500 passive activity loss against your active income. So let's say you are below that $100,000 and you have that $7,000 real estate loss. It's going to show up on Schedule E, and therefore your W-2 earnings are going to be able to be reduced by $7,000. So that's a way of tax planning. That $7,000 can then, let's call it the 20% bracket. That's a $1,400 income tax savings. So how do we make sure that our real estate is operating the most efficiently tax-wise? Well, make sure that you are setting up your depreciation. Make sure that you are selecting the exact class life of those items. And a lot of our listeners, they will go to and from, they're self-managing, starting off with this real estate empire, and they will come to and from the property, and they'll have to show tenants, and then they'll have to take cell phone calls. And I ask some questions because being a CPA, I can review that Schedule E on your 1040 tax return and start asking some very pointed questions. A lot of times they do not take automobile expense because they didn't track it. Well, how many times did you go to and from the property? And basically the mileage for business is 50 cents per mile. So if you travel 1,000 miles, that's $500. At your 20% bracket, that's $100 of tax savings. So the conversation right there simply is I'm asking the right questions. Being a tax attorney, a CPA, I understand what's deductible. And if you take your information to one of these tax preparation services, they're just going to put your numbers on the return. They're not there to do tax planning. And that's why being a listener here on the Professional Edge, we're trying to understand tax planning and keeping more dollars in your pocket so you can grow this portfolio to have that safe and secure retirement. So again, if you're trying to do this by yourself, or if you're doing this tax preparation, that's not tax planning. So again, give our office a call at 877-654-9798. That number again, 877-654-9798. I'm pretty confident I can add value to your tax planning. I've done it enough times that I would be surprised if I did not save you $1,000 on just a very simple conversation, sitting down, reviewing some documents, and giving you some suggestions on how to do additional tax planning. So if that's of interest to you, $1,000 tax savings, that's worth making the call at 877-654-9798. That number again, 877-654-9798. So back to that Schedule E on that rental real estate. What do we do on that tax planning? Well, the other thing is you have your cell phone. You take calls from tenants. You take calls from prospective tenants. So are you actually writing off the percentage that you use your cell phone on your Schedule E? It's another often missed category. Yeah, you do take your cell phone, but people just don't go to that effort and say, hey, I do use my cell phone. Here's my bills. And I pay $100 a month, $1,200 a year. So we're not able to take that $1,200 unless you have a dedicated line to your rental real estate and you use it 100% for business use. Then yes, you can actually take that off of your taxes. But let's say that you have a cell phone. It's not a dedicated line to your real estate business. So we calculate what percentage of use is towards that real estate business. And therefore, I'm okay. I'll sign off on the return on saying you use it 15%, or quick math, let's do 10% on your $1,200. That's $120. And at 20%, that's, call it $24. So that's $24 of tax savings. And you say, wow, well, that's not worth all that effort. Well, you got to understand that underneath the Internal Revenue Service, there is not a magic bullet. We can't wave a magic wand and eliminate your taxes. What we do is, the saying goes, singles and doubles add up to runs. So we're just hitting singles. That's all we're doing. We're making these simple little tax planning strategies to reduce your taxes. This little bit, this little bit, this little bit. So we're hitting singles. And you know what? In baseball, we hit enough singles, we're going to get some runs. So again, there's not a magic wand to eliminate your taxes. But if we do all these little simple things and get $24 here, get $100 here, get $1,200 there, when we add it all up, it is significant tax savings. So again, we need to do the little things to add up to real dollars. So singles in baseball add up to runs. So in order to do that tax planning, if you've not sat down and done an actual tax planning strategy, do give our office a call at 877-654-9798. That number again, 877-654-9798. So we're staying on that investment rental property. So we have our business miles, we have our cell phone that were there. Now, the other thing is repairs and maintenance. Well, the Internal Revenue Service defines a repair as something to fix or maintain in a proper manner, does not extend the useful life. So if you have a leaky faucet and you repair that, then we're going to be able to deduct that expense. But what if we put in new hardwood floors? We want to spiff up your rental property. Well, the Internal Revenue Service says that's not a repair. That is a improvement. So therefore, you need to capitalize that and write it off over the useful life of those new hardwood floors. So being on the side, we want to try and maximize your repairs and defer having to capitalize these expenses. So clients will come in, they'll buy a rental property, they'll rehab that property, and they will think and have the misconception that they're able to write off all $40,000 that they put in to rehab this property. Well, unfortunately, the Internal Revenue Service says those are not repairs, those are capital improvements, useful life beyond a year. So we need to set up the depreciation schedule, and that goes back to the bifurcation and segregation of those assets, because floors are different useful life than an HVAC system, and we hedge as much as we can legally within the limits of the Internal Revenue Code what we can actually write off as a repair this year. So again, when you're structuring the transaction, it is essential for your investment tax planning. So counsel and advice from a licensed tax attorney CPA on how to maximize your net that you keep. Give our office a call at 877-654-9798. That number again, 877-654-9798. Let me digress here a second. Being a listener here on the Professional Edge, we've had multiple combinations of individuals coming on board, and they need their estate plan done, they need their tax planning done, and they have not looked at their investment portfolio allocation. They're sort of the ostrich putting their head in the sand. So what we've done is actually combine these three disciplines, the estate plan, the tax plan, and the investment planning, and combined that and made a dramatic savings for our listeners here on the Professional Edge. And the way to check that out is to go to our website, emcthebundle.com. That is Echo Mary Charlie, thebundle.com. Echo Mary Charlie, emcthebundle.com. And take advantage of that. That will get your estate plan done. A lot of our listeners, we've been wanting to get that done. And we lost my mom, and her estate is a mess, and we just say we're not going to have our estate go that way. So this is the impetus to get that started. Significant savings, significant advantage to you, a listener here on the Professional Edge. Again, that website is emcthebundle.com. That is Echo Mary Charlie, thebundle.com. My name's Todd, tax attorney, CPA, certified financial planner, host here on the Professional Edge, and thank you for listening.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Scene Todd by calling 1-877-654-9798. That's 1-877-654-9798.